Aoife, good morning. Thanks for joining us today. Um, there's a lot of debate about coming up, as you can imagine, about the budget and how the budget will be a good thing or a bad thing, or how it could actually unsettle people, question mark. But this year has also been challenging, hasn't it? So I want to get your views on how you've seen the year pan out and actually your fears and hopes about the budget as well, if that's okay. So
Yeah,
nice,
absolutely. Good morning.
small topic.
Yeah, nice small topic. Good topic. Good morning. How are you doing, Chris?
Yeah, I'm good. Thank you very much.
Good. So shall I just kind of kick it off with a few
Well,
initial
yeah,
thoughts, or do you have
yeah, please.
specific?
Well,
Yeah,
I think there's a number, isn't there? There's demand. Is demand softening? Is one big debate. Are rates softening? How's UK compared to Europe? How's the US traveller? I mean, it's all interrelated, isn't it? But it's a
absolutely.
huge. It's almost, I don't think I've ever known so many questions hanging in the air before a budget as there are this year.
Especially for the travel industry because it's had it so good for such a long time coming out of COVID. So definitely 2024 was always going to be uncertain, but it became more uncertain in the first quarter. So definitely, I think in the UK specifically, demand has been very soft. Certainly in the first half of the year, it has been very soft, and that is really reflective of the continued living crisis that we have, and households generally, their household budgets are squeezed, and I think the hotel industry definitely felt that so far this year. Year on year, we have seen demand softening. Although it is still positive. So overall, at the end of August, we had a 1% growth in demand. So although it's soft, it's still positive. So we take that and run with it. But I think definitely when you look at regional performance in the first half of the year, that indicates that it was domestic demand that was soft. Primarily because the regions in the hotel, or sorry, regions benefit more from domestic demand than they do from international demand. So that was definitely felt. And in order to stimulate any sort of demand, I think rates are always the first place to go. And as much as rates have grown hugely in the hotel industry since 2019, mostly to deal with inflation, right? It hasn't been, when there is good demand, of course, rates can grow. When there is compression in a market, rates can grow. But it's not really all about that. It's about dealing with the costs that are being dealt with by hotels, right? The cost of labor, the cost of gas, the cost of electricity, all of the costs that we deal with as a household. Hotels are dealing with that times 1,000, I would imagine. So definitely we did see rates rise versus 2019, but we have seen a slight softening in the average daily rate year to date. And then when it comes to international demand, again, it's more London and Edinburgh that can tell us this story. But international demand has definitely softened as well. We knew that when March came and when Trump made his announcement that the US traveller would be very cautious and perhaps as cautious as the UK traveller. Now, interestingly, we are seeing, like we use tourism economics as a source of information for our international inbound information that we use for our forecasts. And to Europe, the US traveler is still traveling, 5% up year on year, but that is skewed towards Southern Europe. If you look at markets like Greece, Spain, Italy are still benefiting hugely from that US traveler. The UK actually started to see a slight decline. And I had many conversations with hoteliers about why that decline might be. I think you can firstly look at the exchange rate. It's 1.31 maybe dollars to the pound, which is great for us if we want to go to the US, not so great for the US traveler. And actually, even though rates are softening in the UK and Europe, it's still more expensive for the US traveler to come to Europe. So that's definitely one factor. Another factor is, of course, Paris had the Olympics last year, and Paris became a very attractive destination for the international traveler in 2024, but also
Mhm.
in 2025, much like London enjoyed that, right? In 2013,
Golden period, yeah.
it was a golden period for London, and now
Yep.
Paris are having that golden period, and that's,
Yep.
fair. So I think there's that. There's also the tax incentives, tax-free shopping, etc.
Mhm.
That is always raised by hoteliers as well as an issue, and that the Middle Eastern traveler and perhaps the Asian traveler may be choosing other destinations over London, especially when we look at the luxury segment in London. So, like you said, in your question, so many reasons why demand could be soft for the UK, but definitely we felt it in the first half of the year. Now, I do want to add that going into the summer months, actually, we have seen a very big improvement in terms of performance. So although demand was soft, occupancy grew and so did rate. So a little bit more confidence came into the market. You have to factor in supply changes. There's a little bit of softening of supply as well. But for the most part, we did see some positive performance in July, August, and even going into September.
I was going to say, do you expect that to carry on, or do we think it's going to soften again?
Well, the million-dollar question,
Yeah.
but we have done a little comparison to 2008. So we've been looking at the performance of UK submarkets versus 2008. And interestingly, the number of submarkets with a positive revenue, like a RevPAR, so revenue per available room performance, sat along exactly, it followed exactly the same trend as it did in 2008, right up until the month of June. So I think it was around 44, 45% of submarkets were seeing positive growth in 2008 and in 2025. But then we went into the summer months and we started to see that trend diverge somewhat. And we were kind of looking, July looked good, August looked good, and actually September is showing that about 75% of submarkets are showing positive RevPAR growth in the UK versus 45% in 2008. So we're starting to see that trend change. So when you see that happening in September, it gives you hope that that domestic demand, corporate demand has returned. We're not just depending on, international leisure demand perhaps filling the void in the summer months. Let's see. But for now, we have a little bit of a positive spin on performance when we have a good. Now we issued our forecast at the end of August. I think when we reissue our next edition will be in November. We'll see a little bit of positivity, a little bit of a change, but again, we're looking at a fairly flat year overall.
I'm desperately trying to remember when the financial crash hit in 2008, because I assume that would have hit the figures, wouldn't it? But I
Yeah,
can't
yeah,
remember.
absolutely.
I can't remember. So we'll move on. How about investment? Because investment's been the biggest piece. Because actually, a lot of people have said investment in the UK has been slower. Is that actually the case?
Yeah, definitely. I mean, from a supply perspective, so we look at pipeline data, we look at what's coming into the market, and pipelines have actually grown year on year. But what is happening is that there are so many delays and cancellations of potential pipeline that actually change in supply is pretty flat. But I have like anecdotally, we've started to see that deal flows are starting to happen again. There's a bit more positivity in the space, but it really does depend now. And I think on this budget will have a big impact on this. Financing costs are still very high. There hasn't been much movement. There was a little bit of movement in the last Bank of England release, but not much movement in terms of the cost of financing these developments. And then, of course, construction costs is remaining very, very high. So it's definitely slower. That new supply coming into the market is definitely slower. I think if we compare the Europe and the UK, and again, these are very high level numbers, right? It really depends on which market you're in. But Europe, for every 3 rooms that open, one closes. But in the UK, it's now for every 2 rooms that open, one close. And that actually is comparative to pre-COVID years. So that's kind of positive, but still it's not like the heyday when it was 5 to 1. And obviously the UK has dealt with a lot of change in terms of hotel use and how hotels are being used for immigration in particular. So there's a lot of change in the market. So construction is at an all-time low, I would say. What we do see in the economy and mid-scale segment in particular is a lot of conversions. So a lot of offices are being converted to hotel use. So that's positive. And when you speak to development teams of hotel brands, etc., they see some positivity. It's just very slow.
Okay, so we're leading into the budget. Obviously, you're very
Mhm.
kindly joining us to make a presentation the day after. No pressure on it.
Yep.
What are your hopes? What are your hopes for the budget?
Um,
What are your
yeah, I
expectations?
think, I think at a high level, like I said, demand is soft, but we are seeing some positive numbers. But those positive numbers are not enough really to support the whole industry as a whole. When we look to the bottom line, that's where the hotel industry is really, really suffering. And I hope to be able to share some fairly high level numbers on that on the day. But the cost of labor continuously grows. When the national insurance contributions grew in March of last year, sorry, April of this year, that had a huge impact. And now we have the talk of business rates, the relief for business rates going away next year as well. Now there will be some relief, hopefully, introduced in the budget, some sort of relief for the hospitality sector, but that is going to put on so much pressure on hotels, on already a very pressured environment. Um, I think we also have to consider inflation. Inflation is very high in the UK, so I think it was 3.8% in August. And inflation for service is even higher than that, right? So 4.8% or 4.9%. So that really does continue to put pressure. So I think from a budgeting perspective, or in the budget, I think that some support on the bottom line from a labor and a business rates perspective would be helpful to the industry as a whole.
Okay, and do you expect to see it?
Pardon?
Do you expect to see that?
Um, well, having been watching the news the last few days,
Seems to get harsher, doesn't
it
it?
it seems to get harsher. Yeah, like from a taxation perspective, it looks like they're looking for creative ways to generate revenue. So not by directly impacting the employee, maybe with higher taxes, but doing things in a different way. So it's very, very possible that um, they will start to raid through different creative ways, and that one of those could be business costs for sure.
Yeah.
Yeah.
Aoife, thank you so much indeed. I look forward to welcoming you on the 27th of November, and
Looking
thank you
forward
for
to
your
it too.
time. Thank you for your
Thank you
time
very much,
today.
Chris. Good to see
Thank
you.
you. And you. Take care.